bro. What's up?
It's really
Yeah,
good. What's up, man? It's good to finally meet you. How old are
yeah,
you,
bro.
bro?
Bro. 18. No, about turn 19.
You're 18. All
About
right,
turn
I'm
19.
20, bro. I'm 20.
Yeah, you're young.
Yeah, I just turned 20. Yeah,
That's cool, man. That's cool. Yeah. I've been
yeah,
trading for just upwards of a year and a half, right? And I've been
yeah.
profitable with three different types of strategies now. It took me about 6 months to learn one,
Okay,
and it was
okay.
nothing to do with technicals that changes my profitability. It was a book.
All right.
Best Loser Wins. I
Yeah,
recommend everybody go read that book. It's actually a
definitely, definitely,
psychological shift that changes everything. It's from
definitely.
accepting your losses and moving on from them without, thinking twice about them and never adding to them and always
Exactly,
pressing your winners for the max you can. So
exactly,
thinking from
exactly.
that perspective, whether it be smart money, whether it be support and resistance, it could be trend lines, it could be indicators, okay, maybe not indicators, but
Yeah,
it could be
yeah,
the opening prices, time theories, whatever you're doing. It's all about that small
yeah,
principle that could flip your trading,
yeah,
which it did for me, which is small losses,
yeah,
very, 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 very big wins. You need to prioritize making sure your winners
yeah.
are always squeezed out as much as they can. Losers will always cut the short as possible. So I started off at
Exactly,
my
exactly.
6 month mark. I was doing SMC stuff. I learned a lot of stuff from Casper,
Yeah,
right? It's got a lot of credit to him. He still does a
yeah,
lot of great SMC stuff.
yeah.
I was profitable when I was scalping. Didn't like that at all. I hate scalping, and that's mostly
Mm,
two reasons. First, it's impatient, honestly. Like a little bit of it, like I think
yeah,
uh it attracts impatient people, and I had a lot of
yeah,
stuff going on, so I needed time. So I couldn't sit
yeah.
down to desk scalping. So I switched over to
So
SNR
you're a
stuff.
swing trader?
It's a
You
day
swing
swing
trade?
hybrid, day trade swing trade
Mm-hmm.
hybrid. But I'll go into that in a
Okay.
second about how I run my
Yeah,
setup. So then I moved on to
yeah,
SNR, which is support and resistance.
yeah,
Over after
yeah.
SMC, I learned first from the market maker's perspective of the liquidity and stuff, right? Which it was
Okay.
good, but
Yeah,
then you can go into SNR already like understanding that like okay, like this trend line. If I use SNR with trend lines, and
yeah.
you already know that after a specific number of taps, that's
Mm,
liquidity. So you don't use it for that many taps. You don't use the fourth, fifth
yeah,
tap. You only use the third tap because it's liquidity after that thing. So the way like to explain it to
yeah,
people with trend lines is yes, this is true. The trend lines are engineering liquidity, but you can still use it while
yeah,
it's engineering that. And then after that, just don't use it. Like the third tap
yeah,
is what most people
yeah.
retail considers a full trend line. You could use the first two taps and the third one is your entry.
Mm,
After fourth, it's too late, right? So
yeah,
it's engineering there
yeah,
for like the
yeah,
support and resistance does engineer liquidity. There's no question about that. But you're I would rather
yeah,
not like sit there and presume there's stops here, stops here. You could still trade within the SNR. It's engineering liquidity
mm,
while it's happening, but just don't be too late, right?
yeah,
That's the strat. And now I
yeah,
use
yeah.
a custom strategy that I learned from a mentor. He doesn't teach anymore, so yeah, I learned it from him,
Okay.
and it was yeah, and I modified it a
Yeah,
lot, and yeah, it's
yeah.
a one-on-one strategy. It's like something completely developed by me. I mean,
Definitely,
obviously took inspiration from him. So
yeah,
so it's pretty good.
yeah.
The way I run my day trades is I have a fixed
Mm,
depending on the asset, I have a fixed SL, fixed TP. So it's very easy for me to just
okay,
trade within a very specific time period, and I just enter exit. It's very
okay.
very simple. It's very stress free,
Yeah,
like because I do it every single day the
yeah.
same thing, and it works. So that's
Definitely,
my
man.
my journey.
Any strategy which has to be simple. Yeah, definitely. Because I personally believe that um, out of out of all the strategies, any strategy will be profitable if you really stick to the rules. 90% of all the strategies out there, whatever strategy you watch on YouTube, they're really profitable. Maybe not in a weekly basis, maybe not on a daily basis, but at the end of the month, you will still be making some money if and only if you really put the work in and follow all the rules. That's essentially it. And like you said, um, any strategy should be simple, because if you actually begin to understand how difficult it is to make a strategy, the credit has to go to you. I mean, obviously your mentor did the work, but yeah, you created your own strategy. That's something that most of the people really can. There's nothing wrong with the people who can't create their own strategy, but there's still you put in a lot of work. I can see
I
that
I
because yeah,
I
creating a strategy is good.
yeah, I truly believe that like the idea of SMC, the reason it works so well, and I've really talked to a lot of
Mm,
very
mm,
profitable SMC traders, absolute killers, man. Like these
yeah,
guys are gonna flip accounts quick,
yeah,
like uh 500
yeah.
to 5K in like weeks, dude. And like they
Okay.
always like everything I've noticed in common is the good thing about SMC as a whole is its concepts. Most of them are concepts, like the concepts of a fair
Yeah,
value
yeah,
gap, the concept of an order block, right?
exactly,
And you build your
exactly.
strategy upon that. And I truly believe at the end of the day, and maybe I'm being blunt when saying this, but it's all pattern recognition.
Mm.
That's all it is. You're identifying
No,
after
exactly, exactly.
this
At the
pattern
end of the
happens,
day,
and
it
this
is
pattern
pattern
happens.
recognition.
So you don't
Yeah,
have you're not a bank. You don't actually have the orders. So you're recognizing patterns, right? Based on a
yeah,
theory given by someone. And I truly believe that like because you know at this point that you can't trade every single
yeah,
fair value gap.
yeah.
That's just not gonna work, right? So it's not the concept that's powerful. It's that pattern,
Exactly.
like
It's not gonna work. Yeah,
like sequencing them together. So like finding the perfect sequence, like after this happens, and this is what I'm looking for, and finding an edge in
yeah.
that.
It's
So I feel
recognizing
like
the A plus setup. Right.
so
Yeah,
I feel like there's
yeah,
even with that's why with SNR, whether it be SMC, you could just no matter the concept, you can find a pattern that works. It's just hard, as you said, like hard to stick to it or whatnot, right?
yeah,
So
yeah,
it's
yeah,
that's what I'm
yeah,
thinking with like SMC stuff. Like I think that fair value gaps by themselves don't work. Order blocks by themselves don't. Not every single one of them works, but maybe a combination of
yeah, yeah.
things happening working, and then liquidity on top of that or whatever. Like that. That's
Exactly,
what I think
exactly,
makes people profitable, right? So whenever I in my videos, I'll come off very
exactly.
aggressive against ICT traders. I'm not against them. I'm against them not
Yeah,
using other confluences because I think. A lot of them would benefit from like just adding another confluence. Like it's not like you're being part of retail, if you just add another like profitable edge,
mm,
once you combine them, you're just increasing your win rate
yeah,
and decreasing your losses most of the time,
yeah,
unless you're just not not as you said not going
yeah.
to follow the rules. What's the edge? What's the difference between most IC traders? What keeps them unprofitable versus like in a long term period, like people who are 3 4 years into ICT and they're not
Yeah.
unprofitable, or even any
Yeah,
trading in
because
general?
I've seen like tens of students, even for me, I've seen like tens of students who have been trading ICT. I mean, at least they say that they have been trading ICT for like a couple of years, right? I personally learned ICT only for a year, right? And I'm still profitable and they are not. The only reason I believe is that they do not watch the ICT's videos and they try to, there are a lot of videos on YouTube that give you the 10-minute strategy, the 15-minute strategy. You'll watch this video, the Judas swing, the infamous Judas swing and the silver bullet. They don't really work. Okay. This is not me being against ICT, but you need to understand that Judas swing and silver bullets, they are entry models. Okay. They are the models which you have to look at while you're entering a particular trade, right? They are not a mechanical strategy, right? You can't just enter once there is a market structure shift. No, it doesn't work like that. You have to go through the daily bias. You need to anticipate which direction the market is most likely to move. And like you said, support and resistance or liquidity, both are essentially the same. If there is liquidity over the support, then I would anticipate that once the liquidity is swept, I would anticipate sells. Because if the trend is selling, I wouldn't be going against the trend, right? So I would anticipate that once the buy side liquidity or whatever the liquidity which is resting above that is taken out, then I would anticipate the reversal, which I've been doing personally for like 2 years. It's not really that hard. But all the people have been misguided by the information that they're spreading on YouTube just because they're getting a lot of views. Because people be like, here's a 15-minute ICT strategy that ICT told himself. No, ICT told that you have to watch the entire 2021 mentorship videos. There are like 41 videos which are 1 hour long. Each video is 1 hour long. So if you watch those things, you will recognize the pattern. Like you said, it is essentially a pattern. Once you find the A plus setup, you will visually see a pattern, maybe U shape. It may not be, all those silly patterns that they sell on Amazon. It may not be like that. But yes, definitely it is a pattern recognition. Whatever trade style you take, it definitely is a pattern recognition. And once the liquidity is swept, or like you said, fourth tap in or a third tap in, It's essentially the market being repeating itself over and over again. So
So
I would say the biggest mistake that they do is they don't find the right content on YouTube, right? The
shortcuts. They
only
try to
right
take
content on
shortcuts.
YouTube for ICT traders, yeah, they try to take shortcuts. They think that all the 41 videos which are 1 hour long each video can be reproduced in the 10-minute video by some forex guru. It doesn't work like that, right?
So
But
what do
even
you
if
think
it does
about
work, they
stuff
don't
like
stick to those rules.
okay, what do you think about like let's say a profitable edge that a trader like, let's say for example Casper would put out where he's like, this is a strategy I will
Hmm.
backtest in front of you, make sure you know it's profitable. What's your take on like people not taking that
Yeah,
strategy and being like, I'm not gonna modify this and I'm just gonna run with it, right? And sticking to those rules. Do you think that's a good way to go about it, or do you think they should
yeah.
modify it to their own system based on like, ICT's methodologies?
I mean, there are two options. One is like you making a completely new strategy, but again, you know what you're doing, right? All the beginner traders, they don't know what they're doing. So I go by a rule that if it doesn't break, why do you change it, right? If it still works, then you don't have to
Yeah,
change it, right? Not all the people have to make their own particular strategy to become profitable, right? So that's actually my take on that. So I would just copy any strategy if it works. And like I said,
yeah.
90% of any strategy out there really works if you just
That's
follow
why
its
I
rules.
that's why I'm so open to like I'm pretty like
Yeah,
shameless when it comes to like if somebody's like genuinely interested in learning trading, first thing I'll tell them is I'll be like, it doesn't
yeah,
even have to be me. Just find someone who's live trading and profitably trading, like, right? And just
yeah,
go to them, see
exactly,
what they're doing,
exactly.
learn from them, and
Yeah,
and most important part to me in the entire trading process is accountability, because I feel like you can't really fail if you're being held accountable to
exactly,
execute on a profitable edge. And with that being said,
exactly.
if you're if you genuinely come to me and be like, I want to learn your style, like I feel like that's a disservice to you to not teach you my style. That's how confident I am in my edge that like I could teach it to
Yeah,
anybody because it's very
yeah,
simple stuff. So it seems like the same
yeah,
way for you. Like if you're, it's very hard for people to fail if your edge is just that's the same thing every single time. Like, bro, why did you not take this? Why did you take this? Why did you not take this? Why did you take this? It's
yeah,
very, very, very
exactly,
difficult for them to fail unless they just ghost you. That's the only time anybody's ever failed with me. It's like they just
exactly,
ignore you because they made a
exactly.
bad trade and they don't want to answer.
Yeah,
People say you said people try and find shortcuts. With that being said, do you think that
yeah.
are they better off like watching like whatever all of ICT's videos, or are they better off maybe taking a like smaller video, like T trades or some guy who's built a specific model that's proven edge over FX replay, back tested themselves, get familiar with the
Uh,
strategy, and just run with it. Which one do you think is a better option?
for me personally, if he's a completely beginner, yeah, if he's a complete beginner in Forex, he doesn't know what a candlestick is, then he shouldn't even be touching ICT, right? ICT is for people who are, let's just say, who are at least 1 year ahead into trading. They have made loss, they're not consistent. And then if they know all the basics, then they can actually switch to ICT, because ICT doesn't teach you what a candlestick is or what a pattern is or what the support or resistance is. He doesn't teach you all that. It's really hard for a beginner trader to understand ICT. That's the reason, like you said, you have to find a mentor. It doesn't have to be you or me or anybody else. You go to a free mentorship on Discord. There's like millions of channels with Trade Live and whatnot. They give you the basics of forex trading, the basics, the utter basics, and then once you realize that, yeah, I've got it, and now I understand. Then he can go to the YouTube, go to the ICT 2022 mentorship or 2016 mentorship. There are like 30 videos and the 41 videos in the 2022 mentorship. He can then start revising them. There is an oversaturation point. So essentially, he cannot just be binge watching those videos like a Netflix series. He can't. He
Yeah,
won't understand anything. Each video he watches, he has to replicate that on the charts, or else it would just be a waste of his time.
it's
Not more
it's
than that.
uh it's a more pure form of entertainment. That's all it is. And at that point, you're not
Yeah,
actually doing
exactly.
anything. So what
Exactly, exactly.
you say that with like, okay, maybe go through the mentorship after having some experience in
Yeah,
candlesticks. I think that's another thing people don't understand. When they look at an H4 daily chart, they try and draw lines. They don't
yeah,
understand that like like what a wick actually means. Like that's a story on a lower time frame, right? You shouldn't have to go.
Yeah,
I'll tell you right
exactly.
now, I don't
Yeah.
go
They don't know the
below
basic
H4.
definitions of anything.
Dude, I don't go below H4 on H
Yeah,
or H1. But I'm for my entries, but I'm watching the chart. I'm sitting there
that's
watching the
great.
chart 24, or like whenever my entries are there. But I understand when a wick goes
Hmm.
down, I understand that like okay, I probably should drop
Yeah.
the time frame down just to at least understand the story behind it. People would just be like, bro, look at this wick, this is the rejection. You don't know what did it
Hmm.
actually reject? Did it
Yeah,
close? What happened? Right? So I think it's as you said, very important to understand. I think
exactly.
honestly, everybody should know what a doji is, like the
Exactly.
bare minimum. And like that leads into my next question. Why do you think that like a lot of the SMC or ICT community is very, very closed off to the idea of learning a new system, like or a new form of technical analysis and using that as an extra confluence? Like let's say
Yeah.
like maybe a newer form of like opening levels. Like I know people have this new time theory of the day. I
Yeah.
know that guy, right? So like
Yeah.
there's a quarterly theory and whatnot. But I'm talking like yeah, like exactly like that. But like time based levels, just newer stuff, and just use that as confluences. I've seen so many people so closed off to anything ICT doesn't say.
Yeah.
That's all. His like we did take it as like it's the word of the best traders or whatnot. I feel like
One second
they're
here.
very closed off.
Oh, yeah. Yeah. So, yeah, let's just say that. And yeah, personally, me, I'm not a kind of guy who creates an ICT cult and asks all the people to trade on ICT and this is the only profitable strategy. You can't go on SNR, you can't use any indicators, bullshit. No. I believe that, like I said, all the strategy, every single strategy you take is profitable. But, but I personally believe that ICT and SMC Forex gurus are are more of a salesperson than traders, right? Look, no bad thing to ICT, Casper, or whatever SMC traders there out there. If you actually look at them, people are more inclined to join their courses because they give some sort of mysterious strategy vibe or something like that. Whenever you see ICT, he doesn't edit any of his videos. He doesn't edit any of his videos. He just goes through like a university lecture or something like that. People are more inclined to learn from that because they think that is legit. Okay. I'm not saying that he's not legit. I'm not saying that he is legit. Okay. Whatever he is, ICT personally, I think he is a very good guy. He does all the teachings perfectly, but he is a better salesperson than he is a trader. I personally believe that. But all these concepts do work because there's a lot of people in ICT or SMC that really make money consistently. So no hate towards that. But yeah, SMC community and ICT community is basically a cult where the students or the people who are inside that they think that all the other people. Let's just say you. I put a message in Telegram that I would be doing a podcast with a person who is against ICT. I've never spread any hate against you or whatever that, but those people are just reacting violently, right?
Yeah.
So it just proves that all the students who are really not making money are, I would say, brainless, man, because they just react off of these comments, right? I already told every single person that even they know that all the strategies are profitable, right? But they believe that ICT or SMC is some sort of special skill that cannot be acquired by all the other retailers, right? We are essentially trading all the same thing. We are essentially making money in our pocket. So the end goal must be the same, right? This is just another strategy. ICT is just another strategy. These people are making it into a cult where they just see all the other traders as retailers, right? So it's just some frame of mind, I would say, with all the other traders. But I personally think it's really wrong to actually judge people if they're trading ICT or not trading ICT. Just another strategy, man. It's just another
Yeah.
strategy that makes you money, and that's about
Yeah.
it. But all the students, they don't believe that. They believe that only
Well,
ICT is the only way to make money, and that's completely
okay.
false.
Yeah, that's I mean honestly, can't I think marketing with pure
Yeah,
intention is never a bad thing, right? And I understand what he's done about the following for himself, and I really do respect
yeah,
that. I truly mean that. And I'm by no means an ICT. I just think that
yeah, yeah,
it's wild to think that it's a strategy that differentiates people when the profitability rate
yeah,
is the same among everyone. CMC Markets did research on this. They said that no matter the strategy is not is like the least important thing. when it comes to profitability. It's like literally anything
Mm.
else can be the metric, right?
Exactly, exactly,
And
exactly.
I keep I'm gonna refer back to him because I think he's the one who changed my trading completely forever. Uh, Tom Hugard.
Yeah,
He, if you look at his Telegram, like people say he's losing this, he has losing months, like blah blah blah. If he used ICT, he'd be more profitable. He has not lost off his
yeah,
strategy, and like, well, he obviously he's lost money, but like over time he's so profitable. Trading a
yeah,
simple breakout on
yeah,
scalping, right? I'm not personally a fan of scalpers, and that's
yeah,
because I feel like a lot of them tend to be impatient, but like he's mastered his emotions completely. Like he's been
yeah,
trading for 30 years or something.
yeah,
So
exactly.
look at Tom Hugard. Like he
Yeah,
trades a very, very, very basic strategy, and his psychology is on point. Look at it where he has seven
exactly.
figures
It's not
in
about the
about every
strategy, right?
currency in the
It's
world.
about the psychology. Yeah,
Yeah. So I think
yeah, yeah,
that's like a missing piece that people just overlook. That yeah, you need, it's the strategy is the
yeah.
least important thing. Like so, I feel like a lot of the people would benefit from if you're not profitable or if you want to refine your edge because you can always
Mm.
refine it, right? So it's like if you wanted to
Yeah,
add
yeah.
let's for example, like a trend line or something, like you can add that. You just have to set a criteria for when that's valid or when that's
Mm.
invalid. It's like maybe it's a
Yeah,
wild example, but like if you look at some of these guys doing trading small cap cryptos, right? They're not particularly the
yeah,
most
yeah,
like technically adept guys because on a lot of these technicals just straight up don't work on like shit coins or meme coins or whatever. But these guys have found a pattern that
exactly.
just works. Like let's say like 2 out of 10 times, but that 2 times it works, it's like makes up
Yeah,
for way more. And you could just do the same thing in the
exactly,
markets. It's the same thing as sports betting too. I have so many buddies who
exactly.
sports bet professionally, and they it's just a unit system
Yeah,
and a psychology thing, right? You can't let a loss trip you up.
yeah.
And so, like, what's your take on like how do you teach your students like with losses? Like, do you hold them accountable, being like, yo, why did you take that trade, or like if they get
Oh,
choked in?
definitely, definitely. I'll show you these two books. Yeah, these two are my go-to books. So every person who actually, all the students I have, they do have these two books shipped directly to them. So I put a simple rule. Whatever trade you do, whatever trade you take, is if it's mine or if it's their own trade or analysis, they have to journal a trade, right? I don't care about the RR. I don't care if it's a win or a loss. I don't want any of that to be mentioned. They have to be able to journal the trade on a particular book, physical book, not even the notes and whatever it is. So take a pen, take a paper, journal your emotions, right? I FOMO entered, journal it. I did not FOMO enter, but I entered out of the greed. I, overtraded today. I couldn't control myself. You have to journal those things because that's the only way to actually reflect upon your thoughts, right? Reflect upon your mistakes. So tomorrow, when you open your journal to write the journal, yesterday's journal will help you actually to not make the same mistake, right? It'll
Yeah,
not it'll actually stop you from making the same mistake over and over again. So that's
right.
that's the only way to actually control your psychology. Yeah,
Yeah. So I'm a huge fan of
yeah,
journaling. I don't journal anymore, to be honest, because I do the same thing every day at this point. Like it's literally
yeah,
just I wake up,
mm,
I mark some levels, and if
yeah,
it hits one of those levels, I'll watch how it
yeah,
reacts
yeah,
and I'll take the trade. I do the same thing every day.
yeah,
But if I was learning a strategy and
yeah,
when I was building mine,
yeah,
it takes a lot of journaling. Uh, so I was gonna get into like
yeah,
uh, one more section of this. I was gonna ask, when you take a risk management approach with prop
yeah.
firms, how much do you typically risk when you're because I think the typical drawdown max is 10%, right, and 5% in a day, and then the target's
It's
10%,
10%.
correct?
Yeah, yeah,
So how
yeah,
much do you risk
yeah,
per trade?
exactly. So personally, so currently I have 850K in live funding. 400K was lost in the TFT, but yeah, now it's back,
Fuck.
luckily, so that they'll at least
Yeah.
give payouts. I have like $2,000 for payout spending. They didn't give it. So yeah. So me personally, in the live accounts, I only risk 0.25% per trade. That's my
Okay.
psychology hack because I wouldn't care if I lose this if I lose the trade. It takes 40 trades in a row for me to blow the account, right? If I lose 40 trades in a row, then I blow the account. That's what actually gives me the confidence to trade every single setup. I don't care if there is a news. I don't care if the volatility is less. If it's in a consolidation, if the trade setup meets, then I just take the trade. It's really that simple. But again, on a challenge phase, I risk 3 to 4% per trade because I want to get rid of the challenges as soon as possible. I either want to increase my capital or I just want to go to another platform and buy those challenges and do it. But at the end of the day, in this industry, we only need the capital, right? So in the live capital, you follow the risk management, but after a certain point of time, like you and I, we know what the hell we are doing, right? We know what setup we are using. We know when the setup acts, when we shouldn't be trading. So I just risk the same trade which I risked in 0.25%, and I take the 3% in a challenge phase account, so that I just pass it in a single trade or maybe a day or two, or I blow it in the same day. So
Okay.
that's my take on that.
Okay.
Yeah,
So, yeah, obviously, I have a little bit of a different, honestly, like different approach to risk management in general, and I would like to
yeah,
know, your
yeah,
thoughts on it, and maybe,
yeah,
because I'll tell you what's worked for me very, very, very well in the past like 6, 7 months, right?
yeah,
And a
yeah,
lot of traders, as you said, like you just
yeah,
0.25, and that takes you 40 trades to blow the account.
yeah,
I look at it sometimes. So
yeah.
I have three different types of setups. There's a low probability, medium, and high probability setups, right? And obviously they get rarer and rarer.
Okay.
High probability is
Okay.
like four different confluences lining up, happens like
Yeah.
lucky once a week or something, right? And
Yeah.
so I don't know if you know this
Yeah.
about this, but just kind of just you got rid of prop firms in general completely. They just banned it, like all US traders.
Yeah. Exactly.
So
Exactly.
I'm
Yeah.
in
Yeah. Yeah.
Dallas. So
Recently. Yeah.
uh
Yeah.
so I lost
Any
like
reason? Any reason for that?
well, yeah, the FTC is very, very strict with who they allow to trade. And after my
Yeah. The
forex funds got shut
regulations.
down, a lot of and then MetaTrader or Meta quotes, they're banning people from the US.
Yeah. 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 Yeah.
MetaTrader company, and all
Yeah.
the big companies relied on them. So a lot of my funding went
Yeah.
there. I had TFT. My favorite one
Yeah.
actually was Funded
Yeah.
Engineer. I love Funded Engineer because I passed a
Okay.
500K in, and it's
Yeah.
gonna sound reckless, right? Whatever, in 2 days.
Yeah.
Because I'm a big, big fan of compounding risk because
Okay.
not only just
Yeah.
taking a basic compounding calculator and you can realize how quickly it scales up, but my
Yeah.
mentor took somewhere around 1,000 to 10K in 3 weeks in front of me live trading, so I knew it was possible.
Yeah.
And I have a whole
Yeah.
compounding sheet, right,
Yeah.
on my Gumroad, it's free, whatever, right. And the whole point of that
Yeah.
is to show people
Yeah.
that you can risk, and it's gonna sound crazy, 15% per trade, and you
I know. I know.
as
Yeah.
long
Yeah.
as your
Yeah.
edge, as long so here's the
Yeah.
disclaimer. If you go into
Yeah.
FX replay and you realize I don't lose
Yeah.
7 trades in a row when I execute properly, you realize that,
Yeah.
right?
Yeah.
You might lose 3, 4 or whatever, and you just don't lose 7 in a row,
Yeah.
dude. Why not squeeze
Yeah.
the high probability setup out? Like I'm looking at it um, like I'm looking at like I want to risk 12 to 18% per setup because if I find that one setup, that high probability one that
Yeah.
plays over and over again, I go heavy because I'm testing it over
Mm.
time and I'm getting data and I'm making sure it's good.
Mm.
And that tells me how much I
Mm.
can risk. To me, I'm not going to sit there and risk a measly
Yeah.
0.5% when I can take advantage of a high
Yeah.
probability setup again, right? And that's what allowed me to
Of the
do my
statistics. Yeah.
flips.
Exactly.
Yeah, so it's all data based.
Yeah.
And you risk 0.25%,
Yeah.
but would you say that most people risk 1% on prop firm accounts, and when they take them? Is that what you've noticed?
100%. Yeah.
So whenever I
Exactly.
tell people that that means if you pass a prop firm account risking 1%, I tell them that you could have passed or you could have doubled your personal account. They're like, no way, bro. That's too risky or whatever. But what they don't realize is
Yeah. Yeah.
one
The
percent means
drawdown is essentially 10%, right? Yeah.
it's ten per
Exactly.
it's
The
10 trades
drawdown
to
is
blow the account.
10%. Yeah.
So you with that's
Yeah. Yeah. Yeah.
without
Yeah.
compounding, you would have doubled your account. You would have probably tripled your account
Yeah.
compounding that 10% risk. So
Yeah.
that's the way I trade, right? I'll take
Yeah.
small accounts to big accounts. Recently I've
Mm.
been trying to actually grow a big account a little bit more. Uh,
Yeah.
but like
Yeah.
it takes a lot of confidence in yourself, especially when you get to bigger accounts, to risk that like 5, 10%, dude.
Mm.
Because like imagine you're sitting on like a
Yeah.
80K personal USD account. Now risking 5, 10%
Yeah.
of that is 4K a trade or 8K a trade. Like
Yeah. Yeah.
so it's you have to have that confidence of like especially when you're flipping. Like I if you but you have to think also of the way like if I'm taking 2K to 10K, let's say you completed like a smaller flip, right? 2K to 10K in like let's say two,
Yeah.
3 months or whatever, it's
Mm.
probably the smartest idea to take out that 2K, think that money is not yours, and go full
Yeah.
force on that because now you have that
Exactly. Exactly.
you take that 2K out of that 10K, now you have that 8K left. That money was just generated out of
Yeah.
thin air because of your skill, right? Of your trading skill. Now
Yeah.
you can go
Yeah.
in and risk 5,
Yeah.
10% because you took your money out. There's no risk now, right? So
Mm. Mm.
that
Mm.
that leads me into another point where I feel like you should have two different types of accounts. And I want to know your opinion on this.
Yeah.
I think you should have one where you're passive with it, you're not trying to flip anything, and you should have another one where you're risking this
Yeah.
heavier amount. And like you said, 0.25. I feel like that's your
Yeah.
conservative right area where you're like risking 2.5 on a personal account for me.
Yeah.
And that's like your safety
Yeah.
net,
Mm.
account. And the other one is a little bit of smaller account, and that's like a
Yeah.
little bit
Yeah.
more aggressive approach to
Yeah.
the. And there's a market for that. There's like
Mm.
right now is a
Mm.
market for that. 2022 was not particularly the market to flip because it was
Yeah.
so hard to trade
Yeah.
trends. So what do you think of that? Like, do you think like that's too aggressive of an approach, or like it's just all data based?
Yeah. Exactly. Exactly. No, I'll give you the reasons of why I think, yeah, no, definitely. Because, like you said, I actually use that, but only in a challenge basis because it's essentially not my money. Let's just say I risked $600 on a 200K account in TFT, right? I don't care about the $600 because once I get the account passed, I'll make a lot of money with that, right? So I don't care about the $600. That's the reason my psychology works, and I can risk 4% on that account on a challenge base. But my particular psychology doesn't work well if I risk more than 1%. I mean, if it really comes down to that, it depends on the person, right? You can really maintain your psychology by risking that huge sums of money. But if I really do that risk management, let's just say I risk 2% on a real live account on a 600K account, then my psychology will be really bad, right? I cannot really control that part.
That's
So
what crypto does
maybe
too.
I'm
One,
not still at that level, but
bro, that's
sorry.
what crypto does. That's what crypto does. That's how I got used to it.
Yeah,
Because I used to do
yeah,
crypto and it's like 10% days
yeah,
up down. And I was like, bro, I am so ready for the market. You kind of have to be a little bit
yeah,
psycho to be able to like put in 15% on a setup. I can't
yeah,
lie.
exactly, exactly,
Like I'm sitting
exactly.
there with like a 5K account with like
Yeah.
$1,000 on risk on that account. It's like you'll
Uh,
see some on my story, bro.
yeah,
It's like 5,400 balance and it's like 2K in profit. And it's like people
yeah,
will be like, bro, that's like
yeah.
20% of your account. Why haven't you TP'd? I'm like, bro, that's like 1 hour. Like it's a trade decision 1 hour right here. Like two
Exactly.
because so it's like, bro.
Exactly, exactly.
So that's how you flip
Yeah,
accounts, right? That's if you want to. I think that, and it's
yeah,
not financial advice, but like I think anything below 1K, you're gonna sit there and risk $10 on
yeah,
a trade. Like you're wasting your time. You might be you're better off either getting more
yeah.
capital or actually being a little bit more aggressive. Because
Mm,
worst case, you blow that K, but
exactly,
you should
exactly.
have statistics behind it anyway.
Yeah,
So that's what I
yeah.
think of the whole
No,
thing.
no, I definitely agree with that. Yeah. So let's just take a small trader. So and once he actually, let's just say he learned the entire strategy with you, and he's confident that he can trade on his own, then yes, he might be able to pull off the what do you call it, the account flipping. Yes, it is really useful for him at that level. But once you go to 600K in capital, you don't really have to risk that much because the first
No,
reason
I agree.
immediately